Evening all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening as we're here on Tuesday, the 25th of March, 2025, about 6:40 p.m. Central Time. I haven't been putting out new trade recommendations in a while, and you might say, well, I'm nervous about tariffs. That isn't the case at all. I am nervous about them, but that's not stopping me from the recommendations. The chart action, the way I'm doing it and the way that I've always done it, nothing's agreeing. I mean, the trades that I've taken, I was short the dollar. That didn't work. I had another one that didn't work. I hit real nicely in the cotton market. Okay. But I'm seeing the whipsaws. And that's because nobody quite knows what to do. Now, if you go back on your charts and you look at March 14th, you'll see you had a transition point where markets that were falling suddenly weren't in bear trends right after that date, and they moved to the upside. The big question now is, what do you do with it? You know, we have a lot of tariff news coming at us. The president made it clear today that he's going to do it, whether they're in stages, whether it's blanket. We know that Washington is right now full of the leaders, the trade representatives of the EU. It's got people from India there. I mean, it's one country after the other. Vietnam, they're all coming in, trying to figure out where they stand and what can they do. And there are deals being made. The president alluded to that. He said, wait till you see. Already, India has come and said they would like to cut $23 billion worth of tariffs right off the bat for U.S. products. The problem is, for them, it's not enough. They're the most tariffing of the countries next to China that does anything. China's probably not going to agree with anything. Canada's decided to go on its own and stand against the Trump people, and they'll figure out what they do on March 15th. And that seems to be how Mr. Carney wants to play it, because that's one of his election goals, with a snap election coming up April 28th. But you have plenty of countries that have a problem. Now, we do have news coming out in the market. In the morning, you're going to get the Mortgage Bankers Association number. That comes at 6. Then you're going to get durable good orders. They're going to come out on the day, and they're looking for them off 1%. That come out at 7:30, and they're looking compared down 1% compared to the gain in January of 3.1%. I did for you, and I'll put it right here. I want to stand as much as I can off camera, but still be in it. These are the tariffs from different countries. So this is where the U.S. stands. The demarcation point is right here. You can see how it then moves to the right-hand side. That's where those countries actually have a trade deficit with the U.S., and this is where it's the exact opposite. So how does the U.S. address them? There's about 15 countries they're going after. Where will they be? The leader, obviously, is China, as you can see, but you've got the European group, the unions in there. What are they going to do? And everybody's sort of talking hardball, but you and I aren't in the meetings. We don't know what's happening. If things were going great, I would have imagined we'd have heard positive things out of the European Union. We haven't. So those are things to look at. The other thing that we have to consider is how the consumer feels. And what we're seeing right now is U.S. consumer confidence that came out today in the toilet. If you looked at the Philly Manufacturing Index and the Richmond Fed today, in the toilets. So people have pulled back. Now you're seeing durable goods want to pull back. Yet the stock market is still in the bounce mode. The gold market is still very much in the inflation mode. So where does that put everything? Let's go and take a look at what we've got. First off, as much as traders want to talk, the stock market bottomed. Yeah, after a monster break, it bottomed. It was all the way up here into near the 6,200 level. It made a run for the 5,700 level, and you've gotten a bounce back to 58. I don't know. I teach charting. I'm pretty good. I've been teaching it in schools too. No, don't agree with that in any manner. Then we look at the mini S&P. So if you look at this, you can almost see the downtrend where it was. And then on the 14th of March, you stepped away from all that. You can see that when you look at the chart here. It's right here. And from there, it left the market with a different pattern. Higher lows, higher highs. So the trend in terms of higher highs, higher lows turned up. But when you filter it, market was under the 18-day average. The past two sessions, You can count tonight, 3 have stayed over it. So that's a friendly move. On a pullback, the first support probably going to be 57, 53 in that area, the 18-day average. If it continues to rally, one potential number it could have trouble at is the 200-day moving average, and that comes in at 59.02. And the resistance of the Bollinger Band is going to race towards that, but it won't reach it probably until Wednesday or Thursday. And I'm talking trade sessions of Thursday or Friday in that case. So you're already into the Wednesday trade session. It's so difficult when you talk calendar days versus trade session days. But that's going to be the zone that I look for. So we'll see what this market can and can't do. Is it overbought? Absolutely. Has the market said it bottomed out there temporarily or permanently? Yes. I don't know which one of the two to make a statement with. In terms of the momentum in the NASDAQ, it's the same thing. I mean, the patterns look identical, and look at how close the resistance is now getting from the 200-day average at 208.79 to the Bollinger Band at 209.47. But that's a ways up from here. I mean, that really carries you nicely, 300 points, and that's not anything to sneeze at. But you're overbought. So do you deploy new money when you're overbought? I teach that you don't. In the Dow, no trends. You have a lower low, higher high. You have upside bias and you're overbought. So the bounce in most of these markets has used that power to get you up here. They're in just about every case, not a 50% retracement at this point. It's a neat little bounce. There were reasons not to be short, and I don't see any reasons yet to be long. Is that a fair enough assessment? Same thing in the Russell. Nothing has changed there. We look at the DAX. So the DAX had a chance to get real bad. If you'll remember what I said yesterday, if I can get this to come back to us, let's just see if I can get it to do it. Doesn't. Yeah, there it is. I knew it would eventually with the signal. If you had gotten here under 39.87 today, I said to you, that could set up a bearish event because that could give you with this pattern lower highs to even that one from the peak there. But instead, the market continued up. Now, it can still happen if you take out 39.87 as momentum is down. So keep your eye on that. But what I think the pros are doing is they're buying at 40.19, tight stops there to see can they catch the market going up, say $1 or so in that. Interesting point. When we take a look at the 10-year notes, do you see a trend in that? If you do, you're seeing something I don't see. I see a market caught in the Bollinger Bands of whipping now back and forth. Same thing in the 2-year note, identical. In the dollar index, it was so far, in terms of momentum, nothing more than a bear market rally. You lost the bearish embedded reading. You did get to the 18-day average, and for the moment, you've stalled out. Are the tariffs going to drive the U.S. dollar higher and lower? This is what's happening right now. Turn on, if you want, CNBC, Bloomberg. Listen to all the analysts. They're giving you all the pitches as to both sides of the argument. It's very, very fascinating. In the euro, it's the flip-flop of the dollar. You fell back into the support of the 200-day average in the 18. You're not trending. You're oversold as can be. What's the next move going to be in this one? In the British pound, you've lost your bullish momentum. You're pulling right back into the 18-day average. And remember, I showed you, if you're getting my subscriber video, I said on the weekly chart that the upper Bollinger Band is probably going to stop the market, and it did. But you haven't entered bear territory. You do on a close over the 18-day average of closes, under it. When we get to Bitcoin, it's still trying to get the bit of a rally. It's like tied at the hip to the NASDAQ. So whatever the NASDAQ is doing is adding fuel to the fire. The interesting thing about Bitcoin is the CME Group entered a deal in 2021 with Google for help with using the Bitcoin technology to keep track of trades, monies transferred, and so on. And there was an article today on it, how they've begun the really serious steps of beginning that process now. Fascinating as to what they're doing. They think it will speed up money transfers, positions, everything that has to be done. So this BitChain getting very, very, very important to the market. Love to hear that in trading. In the crude oil market, you can see how we've made a run up and ran into a brick wall, by the way, at the 100-day average, the upper Bollinger Band. Helping the market today was news that the Houthis attacked U.S. aircraft carrier, other warships today. They fired missiles at Israel. We will probably hear more about it. If you go on the news, you're not hearing a lot. I read about it in another source today as to what went on. It wasn't just firing. These guys were going at each other. So I am waiting. You know, they got hit the other day, as we all know, the breach of confidentiality. I can't believe that they invited a press reporter still on Signal to be part of a live attack to see it developing. And as much as the president wants to cover it up, somebody's head is on the block there. I am certain of it. Musk already said it's ridiculous that you do things like that and use a public application to do it. And that's what Signal basically is. And he's right. You know, you may not like the guy, but tech-wise, pretty smart guy. When we look at what we're doing, even in the WTI, overbought right to the top there. Heating oil into the overbought area and at the resistance points right through here. And in nat gas still coming down. And as I explained to you, this is that time of year where it's funny for nat gas is you don't need it for a lot of heat. You certainly don't need it for much air conditioning in most of the United States. I know it gets warm in parts of Arizona, California, Florida, but for the vast majority, it's too soon, and we're just getting off our heat. That's the way to look at it. Now, if you like all these indicators, there's more, because we work with TradingView, and we make our suite of indicators available. All you need to do is go to iraepstein.com and go to Client Resources on the top right and sign up for it there. What happens is you'll sign up, we'll get notice of it. We turn it on. If you do it at nighttime, we turn it on first thing in the morning. We'll send you an email. If you're in your TradingView, you turn it off, turn it back on, and the indicators are going to be there in your indicator area. We make it really simple for you. And away you go. I even include outside days, and I highlight them. Now you can turn those features on, off. You can change the colors. You can modify in ways that you want. And my formula for slow stochastics will show up in there for you. So just go to iraepstein.com, top right, client resource. You can sign up there. And I'm Ira. I'll catch up with you all in the morning. Take care.